Okay, let's unpack this. Look, in a world just overflowing with information, sometimes you just want the clarity, right? Those aha moments, the insights that really matter, without getting totally bogged down in jargon. That's pretty much our mission here on the deep dive. And today, we're plunging into a topic that's, well, it's not just making headlines, it's actively reshaping global trade and climate action. We're talking about carbon border adjustment mechanisms. CBAMs for short. These are essentially new border carbon prices. The European Union and the UK are rolling them out. The idea is to level the playing field. It's complex, no doubt. It's already impacting supply chains right now. And we've sifted through a whole stack of sources to pull out the most important nuggets for you. So to start, let's maybe zoom out a bit. What exactly is a carbon border adjustment mechanism? And, what's the big problem it's trying to solve?
Right. Well, the really insightful move with CBAM isn't just about pricing carbon itself. It's how policymakers are trying to surgically address this issue called carbon leakage.
Carbon leakage.
Yeah.
Okay.
Yeah. Think of it as the sneaky way emissions-intensive production might just pack up and move, Go to countries with looser climate policies, specifically to avoid paying carbon costs. So CBAM's designed to prevent that. It applies a carbon price on certain very specific carbon-intensive imports. It basically makes them pay an equivalent price to what they would have paid if they were produced, say, inside the EU under its carbon pricing system. The EU kicked theirs off, the first one, back in October 2023. And the UK is following suit. They're targeting January 1st, 2027 for implementation. So what it means in practical terms is, if you're importing certain goods into these places, eventually you'll have to account for, and yes, pay for, the greenhouse gas emissions embedded in those products.
That makes sense conceptually, but okay, if I'm a business owner or maybe managing a supply chain, the immediate question is, how do I know if the goods I'm importing are actually caught in this net? Is it like everything, or are there specific carve-outs?
That's a really critical distinction. It's definitely not everything, not a blanket policy at all. CBAM only applies to specific goods in particular carbon-intensive sectors, and they're identified by their customs commodity codes.
Ah, the codes.
Exactly. Specifically, Harmonized System, HS codes, or the EU's combined nomenclature, CN codes. So for instance, raw materials like, say, steel sheets or aluminum ingots, they're covered. But a highly manufactured item, maybe a car body, even if it's made of that steel, is generally not covered.
Why is that?
Because CBAM looks at the commodity code of the final imported product,
Yeah.
not the ingredients deep inside. Also, some things, like scrap metals, they're explicitly excluded. The focus is really overwhelmingly on basic materials and simple semi-finished goods. That's where the carbon footprint is usually most significant.
Got it. So it's more about the raw ingredients, the building blocks, not so much the complex finished products. Can you give us a few examples? Which sectors, which products are in scope, anything that might, surprise people?
Absolutely. And the scope is quite precise, almost like a carefully curated list, really.
Right.
First, iron and steel. This is a big one. Covers a huge range, from raw iron ore, crude steel, right through to semi-finished stuff like billets, and even some specific downstream articles, things like steel tubes and pipes, tanks, gas cylinders, and yeah, even small things like steel fastener screws, bolts.
Fasteners too. Okay.
Yeah, but again, more complex manufactured steel things like machinery, generally outside the scope. Then there's aluminium. Pretty much all the basic forms are in scope here. Unwrought aluminum, powders, bars, wires, plates, sheets, foils, tubes, and even some aluminum structures like frameworks, doors, window frames, various containers, gas cylinders too. Basically, if an aluminum product's CN code falls in the 7601 to 7616 range, it's very likely covered.
Okay.
Then cement. Key inputs like cement clinker, various finished cements like Portland cement, even specific clays used in production, all included. Fertilizers. This targets nitrogen-based ones, and their precursors like anhydrous ammonia, nitric acid, plus specific products like urea, potassium nitrate. Electricity. Now here's a really crucial point of difference between the EU and UK.
Okay.
Imported electricity is in scope for the EU CBAM, and it has its own code, CN 2716.00000. So if an EU country imports electricity from a neighbor, the emissions from generating that power have to be accounted for. But the UK's planned CBAM, it will exclude electricity. Totally different approach there.
Interesting.
And finally, hydrogen. Industrially produced hydrogen gas, that's CN 2804.0000. It's also explicitly included for both the EU and the UK.
Wow. Okay.
Yeah.
So those commodity codes really are the absolute gatekeepers here. What's the single biggest takeaway then for companies trying to figure out their CBAM exposure?
The biggest takeaway, honestly. Companies must meticulously check the CN or HS codes of the goods they import. No shortcuts. If a code matches one listed in the CBAM regulations annex, that import is in scope. Simple as that. Its embedded emissions must be reported. If the code's not listed, even if the product contains some material that is in scope somewhere down the line, CBAM does not directly apply to that final imported product. It's truly an item-by-item, code-by-code check that separates the exposed from the exempt.
All right, so we understand the what and the who. Now let's really dig into the EU system. It's already running, right? Setting the precedent. How does it actually work in practice, especially with this phased rollout you mentioned?
Right, the EU CBAM is definitely rolling out in distinct, carefully planned phases. We're actually in the middle of the first one right now. It's called the Transitional Reporting Phase. Started October 1st, 2023, and it runs all the way through to December 31st, 2025. Now, during this period, EU importers of these CBAM goods, they have to report quarterly. They report on the embedded emissions of their imports. But, and this is key for now, they don't actually pay any fee or levy yet.
Ah, so just reporting for now? No cost yet?
Exactly. The first report was for Q4 2023. That was due back in January 2024. And the reporting just continues quarterly. This phase is essentially, a massive data gathering exercise. It's a learning period for industry and for the authorities too.
Okay, so we've got this reporting phase, which is basically data gathering, learning the ropes, but that's just the prelude, isn't it? What's the really critical turning point? When do the financial implications actually bite for businesses? You're talking 2026 onwards.
That's exactly right. January 1st, 2026, that's the date. That's when the EU CBAM enters its definitive stage. And this is where the financial impact becomes very, very real. From that point, importers will actually have to purchase CBAM certificates to cover the declared emissions of their imports.
Certificates, okay, like a permit.
Sort of. Each certificate represents 1 ton of sea conjoints and its price. It will directly mirror the EU carbon price. It's pegged to the EU emissions trading system, the EU ETS allowance price.
The main EU carbon market.
That's the one.
Yeah.
Europe's big cap and trade carbon market where companies buy and sell permits to emit. So importers will buy these certificates from a central EU registry. The number they need equals the embedded emissions of their imports, but adjusted for any carbon price they might have already paid back in the country of origin.
Ah, so you get credit for carbon prices paid elsewhere.
Yes, that's an important point. Avoids double charging. Then these certificates need to be surrendered to the authorities, probably annually, though they might need to buy them quarterly just to keep the pricing signal steady. Let me give you a quick example, make it concrete.
Yeah, please do.
Okay, imagine it's 2026. An EU company imports, say, 100 tons of carbon steel plate. Let's say making that steel resulted in 200 tons of co-euro emissions. Typically, they'd need to buy 200 CBAM certificates. But if the country where the steel was made already had a carbon price that effectively covered, let's say, 50 of those tons, the importer could claim a reduction.
So they'd only need 150 certificates.
Exactly. And if the certificate price is, say, €90 each, which is, in the ballpark of recent ETS prices,
Okay.
the importer would pay roughly $13,500 for that shipment's carbon footprint.
Yeah.
It becomes a direct calculable cost tied to emissions.
Got it. Beyond the actual cost of the certificates, what's the real compliance burden here? Is this just an accounting exercise, or are there, genuine legal pitfalls companies really need to watch out for?
Oh, it's absolutely a legal requirement, not just bean counting. The EU CBAM puts the compliance burden squarely on the importer. Usually that's the importer of record in the EU. So businesses bringing in these covered goods, they really need to be preparing now. Implementing internal systems to even identify the in-scope imports.
Yeah.
Then figuring out how to gather that granular emissions data from suppliers, which we can talk more about.
Yeah, that sounds tricky.
It is. And then submitting accurate reports. Plus, by 2025, importers also need to register and get this authorized CBAM declarant status from their national authorities. And failure to report or failure to surrender enough certificates, that can lead to significant penalties.
How significant?
Well, even now, in the transitional phase, just missing a reporting deadline can mean fines of €10 per ton of co-euro reported late. And in the definitive phase, starting 2026, the penalties for not surrendering enough certificates, they're set to align with the really steep fines you see in the main EU ETS. Those can be quite substantial, easily over €100 per ton sometimes. So yeah, real teeth.
Okay, that gives us a pretty clear picture of the EU's path. Now let's talk about the UK. Post-Brexit, they're doing their own thing, developing their own CBAM framework. What are the key distinctions? How is the UK approach diverging from the EU's, if at all?
Right. So the UK CBAM, it shares the same fundamental goal, definitely. And the broad sectoral coverage is similar too. It's also set to cover imports of aluminum, cement, iron and steel, fertilizers, and hydrogen. And the plan is for it to start on January 1st, 2027. However, the actual design has some pretty notable distinctions. It reflects the UK taking its own independent path here. One major difference, we touched on it earlier, the UK is not planning to include imported electricity in its CBAM scope.
Right, unlike the EU.
Exactly. But on the other hand, the UK has signaled they might be interested in potentially including additional industrial sectors, things the EU initially left out,
Oh, like what?
things like glass and ceramics products. Because under the UK's own emissions trading scheme, the UK ETS, those sectors are considered at risk of carbon leakage, so they might get added to the UK CBAM list.
Interesting. So a potentially different list of goods covered. That's a big divergence. What about the actual payment mechanism itself? Are UK companies also going to be buying those credit-like certificates we just discussed for the EU?
No, and that's another really significant difference in how they're approaching this. Unlike the EU certificate system, the UK plans to treat CBAM as a direct tax or a charge, and it'll be administered through normal tax returns via HMRC, the UK's tax authority.
Ah, through the tax system.
Yeah, so a UK importer will calculate their CBAM liability, basically multiply the product's Invenco Euro emissions by a specific CBAM tax rate, then subtract any carbon price they've already paid abroad, just like the EU allowance.
Okay.
And that gets you the final payable amount. That amount would just be reported and paid via a periodic CBAM return, probably alongside other tax filings. The idea, I think, is to make it feel more straightforward, integrate it with the existing tax system rather than creating this whole parallel market for certificates like the EU is doing.
Okay, that does sound different. And what about the timelines? Reporting, payments in the UK compared to the EU's phased rollout. Are UK businesses getting a similar kind of grace period?
The timelines differ quite significantly, yeah,
Yep.
especially in the first few years. The UK will not have that multi-year transitional reporting only phase like the EU has right now.
Also, no practice period.
Not in the same way. The UK intends to go live in 2027 with a requirement to both report and pay the CBAM charges right from day one.
Wow, straight into it.
Straight into it. However, they do recognize the administrative challenge, especially at the start, so the UK is offering an extended first reporting period just for 2027 imports. Instead of quarterly reporting right away, importers will make a single consolidated CBAM return for the entire year of 2027, and that won't be due until May 30th, 2028.
Ah, okay. So a longer runway for the very first year's reporting and payment.
Exactly. Gives companies extra time to get their systems sorted in that first year. But then, from 2028 onwards, the UK plans to require quarterly reporting and payments, much like the EU's cadence. So the takeaway, while UK firms have a slightly longer wait before the costs actually apply, anyone trading with the EU is already under reporting obligations right now. And if you happen to import into both the EU and the UK, well, you'll definitely be dealing with two distinct compliance systems, different rules, different timings, right from the get-go.
Okay, it sounds like every procurement department just basically became a forensic accountant for carbon emissions. This must be a huge challenge. One of the biggest practical hurdles, I imagine, must be actually getting that emissions data from suppliers, especially ones far down the chain, maybe in different countries. How are the regulators dealing with that? I mean, that sounds like a Herculean effort.
That's an excellent analogy, actually. And yes, it speaks to a very, very real challenge for companies all over the world. Look, both the EU and the UK, their preference ultimately is for companies to use actual verified emissions data from the specific factory, the specific installation that produced the goods.
The gold standard.
The gold standard, exactly. However, the regulators absolutely recognize that gathering this data, especially right now in these early phases, is a significant hurdle, a massive lift for many. Many overseas suppliers might be totally unfamiliar with CBAM, or they simply might not have precise emissions measurements readily available. It's just not something they've tracked before. So to address this, both regimes allow for default values as a kind of fallback.
Default values, how does that work?
Basically, an importer can use a predetermined standard emissions factor for a product type if they genuinely cannot get the actual data from their supplier. But these defaults are generally set quite conservatively, often higher than the actual emissions from a modern, efficient plant.
Ah, so there's an incentive to get the real data.
Precisely. It's deliberately designed to incentivize everyone to get the real product-specific data eventually, because that will likely result in a lower CBAM cost.
Okay, so you can use defaults, which gives some breathing room. But is there a limit? Like, how much default data can you rely on? What happens if you genuinely try your absolute best to get the data, you chase your suppliers, but they just can't or maybe won't provide it all?
That's where the EU's approach, particularly during its current transitional phase, offers a really crucial insight and maybe some relief. Under the EU's transitional rules, so that's through the end of 2025, there is technically a limit stated. It says only up to 20% of the total reported embedded emissions for a given quarter can be based on these default values.
Hmm.
The other 80% is expected to be actual data.
Only 20% defaults. That sounds quite strict, especially early on.
It does sound strict, however, and this is a big however, recognizing the practical difficulties everyone's facing, the European Commission has explicitly stated that the national authorities, the ones doing the enforcing, should show some leniency.
Leniency. How?
Well, if an importer can demonstrate they made all reasonable efforts to get the required emissions data from their suppliers, they might get a pass. So this means if you end up using more than that 20% default data, or maybe you have some data missing entirely, but you can document your diligent efforts.
Like showing emails, questionnaires.
Exactly. Repeated outreach to suppliers, sending them questionnaires, following up with emails, maybe records of calls. If you show you really tried, the regulators may waive or at least reduce any penalties for imperfect reporting during this phase. The EU even updated its electronic reporting system specifically to allow importers to flag missing data points and literally upload justifications like copies of that email correspondence.
Wow.
Yeah. So this best effort provision, specifically for 2023 through 2025, it's acting as a critical relief valve. It essentially treats this whole period as a steep learning curve for absolutely everyone involved.
Okay, that's genuinely a huge sigh of relief for many businesses right now, I bet. But it definitely sounds like it's a temporary flexibility, yeah, not a permanent pass. So what should companies be doing right now to get ready for when that leniency eventually expires?
You're absolutely right. It's a temporary reprieve. It's designed to ease everyone into the system, not be the norm forever. So from a tactical standpoint, companies importing any potential CBAM goods should be proactively engaging all their relevant suppliers right now. Don't wait. This often means sending out quite specific data requests, asking for embedded GHG emissions per ton, usually broken down into direct emissions from the plant and indirect emissions from the electricity they used.
That sounds complex for the supplier, too.
It can be. Suppliers might need to do calculations they've never done before, maybe even hire consultants to help them figure it out. Now, in the EU transitional phase, third-party verification of that data isn't strictly mandatory yet, but it's definitely highly recommended for accuracy and credibility. For the UK, though, when its CBAM starts in 2027, it's likely that verified data will be required right from the outset if you want to use actual values instead of defaults. It's also incredibly wise, maybe essential, to educate your suppliers about CBAM. Many producers outside the EU or UK might not be directly subject to it themselves, but their customers, the importers like you certainly are, they need to understand why you're asking for this data. Ultimately, look, if a supplier just cannot or will not provide the data despite your best efforts, the importer will have to use the default value. They'll potentially face a higher cost once the payment phase starts. And critically, for this transitional period, they must make sure they can prove those best efforts were made, just in case the authorities ask. But remember that leniency is temporary. By 2026 for the EU and 2027 for the UK, the expectations will rise significantly. Companies really should be aiming to have robust, ideally verified data collection processes firmly in place by then.
Okay, so let's try and wrap this up. We've dived deep into CBAM. For you listening, navigating this pretty complex new landscape, what are the absolute must-knows, the key nuggets of knowledge you should really walk away with?
Yeah, I think the most important insights boil down to maybe three things for you. First, you absolutely must diligently identify which specific imports you have that are actually subject to these carbon border charges. And that means getting familiar with and checking those crucial commodity codes, no way around it. Second, really try to grasp the distinct differences between the EU's CBAM and the UK's approach. Remember, the EU has that transitional reporting now, uses the certificate-based payment system later, and includes electricity. Whereas the UK system is going to be tax-based, no certificates, starts later but with payment from day one, excludes electricity, and is potentially looking at adding extra sectors like ceramics or glass. Two different systems to track if you trade with both. And finally, perhaps most critically right now, prioritize your data collection efforts. Start talking to suppliers now. And remember to meticulously document all those best efforts you're making, especially during the EU's transitional period. That documentation could be vital.
That's super clear. Identify the goods, know the differences between EU and UK rules, and get that data documenting your efforts. Now, the regulatory landscape, as you said, it's clearly still evolving. New guidance, maybe final legislation details are still coming out. What's maybe a provocative thought, something for our listener to consider as they move forward with all this?
A provocative thought. Okay, well, if we connect this back to the bigger picture, I'd say CBAM isn't just about compliance. It's not just about avoiding penalties or managing a new cost. For companies that are really thinking ahead, it actually presents a significant strategic opportunity.
An opportunity. How so?
Well, think about it. How can businesses proactively engage their supply chains? Maybe using these new CBAM requirements as a catalyst, as leverage, to actually push for and maybe even invest in cleaner production methods further up the chain. Because ultimately, goods produced with lower emissions will incur lower, maybe even zero, CBAM costs.
Right, creating a direct competitive advantage.
Exactly, a tangible competitive advantage, and of course, contributing directly to broader climate goals at the same time.
Hmm.
So the provocative thought is, this isn't just a new tax to be managed. It's actually a powerful new lever for decarbonization, one that could really transform supply chains if companies choose to use it that way.
That is a powerful thought to end on. Don't just see it as a burden, see it as a potential lever for change and advantage. Treat CBAM readiness as a strategic priority, right up there with tax or customs compliance, and you might just find that significant competitive edge within this whole new global trade reality. Thank you so much for joining us on this deep dive.